You are listening to chartingwealth.com for Wednesday, the 7th of December, 2016. Markets up over the day. They are up literally 0.47% on the total market. We've seen the market cross over on the two-day chart back on the 10th of November. That was a Thursday following the elections. Actually, the market had started moving up the day of the election on our two-day chart, and we saw it cross over on our PPO, that is our price percent oscillator, and then shot up. What has happened over the last few days is that the market topped out on the 30th, actually on the candle ending on the 28th, forgive me, and then we had sort of a down day on the two-day candle on the 30th, followed by another down time, I keep saying day, a down time on the two-day candle for the 2nd of December, and then popped back up again over the last two-day candle. So we have a green open box candle as the market has really resumed its march up over the 4 days from the 28th, 4 trading days, those two-day down candles. The market had slidden sideways and really had not recovered from where it had been on the 28th of November. Well, it has just barely moved above where it topped out that day. And again, we've got a two-day candle that is a green open box candle. Now let's go look and see what the market's actually doing on the 4-hour chart. It's not yet crossed over going up. It does appear to be getting close to that. Pullback could be ending. We see that the derivative oscillator is actually losing downward momentum and getting close to crossing over going up. Not occurred yet. We are below the two-day trend line. We're going to have to redraw that at some point when we can. We're above the weekly trend line, getting close to a crossover going up, so be watching for that throughout the day on Wednesday. Now we're going to go back to our two-day chart and we're going to check out the S&P 500. We see that it's up for the day 0.32%. It too has recovered after that 4-day sideways slide. It's closed above where it was back on the 28th of November. And let's check out the 4-hour chart, see what we see there. Getting very close to crossing over, going up on the PPO and derivative oscillator even closer. So watch for that. It may do that in the morning. Of course, the concern we have is we're already above the Bollinger Bands. They will broaden out to allow that up move to continue. So again, let's just see if indeed it rebounds and we get the ability to jump into an up practice trade on the S&P 500 that we see depicted by SPY, the Exchange Traded Fund by Spiders. All right, now we're going to go back to our two-day chart. And lastly, as far as the indexes go, going to check out the one that moved up the least for the day, 0.23%. That is the Qs, which is the NASDAQ 100. Crossed over going down on the 2nd. And we see that there has been, again, continued down movement. What all do we see going on? Well, we look at the two-day chart. It is a confirmed down move since it crossed over going down on the 2nd. We look at the weekly chart. It's been a confirmed down move for a while. And we look at what's really going on. Still, the derivative oscillators in the positive. Market was up over the course of the two-day candle. So let's check out what's going on the 4-hour chart. We see that a pullback is underway. Remember, we've got a confirmed down move on the weekly and the two-day chart. The daily chart, the half-day chart rather, may end up crossing back over, going up. And again, if it's not enough movement to pull the two-day chart into a positive, then when it rotates back over going down, we may have the ability to jump into an inverse move on the Qs. So we've got a couple of things setting up. We've got the potential for an up move on the total market and the S&P 500, depending on when the pullback ends. And then we've got the opposite occurring with the Qs. We'll just have to wait and see if any of these come to fruition. So it looks like what's probably more likely is the S&P 500 crossing over going up. But until that occurs, we don't jump in. We keep our powder dry and we wait to trend to follow. Remember, our rules are, first rule, don't lose. Second rule, when you can and it's safe and everything's going in your favor, make money. But if you lose money over and over and over again, you will lose it a whole lot quicker than if you don't lose money. Pretty common sense, huh? Some people just don't seem to get that. Now, we're going to go back to our 2-day chart. And lastly, we're going to check out what gold is doing. Well, gold's confirmed down move on the weekly chart and on the 2-day chart has continued to trundle down. Gold down 0.10% for the day. What do we see going on our 4-hour chart? 4-hour chart has not been working for us. Now, again, it's in a confirmed up move. If it crosses over going down, of course, you can do our traditional method and see about jumping into an inverse or down move on gold. Hasn't happened yet. We'll continue to watch and see if indeed that occurs. But as far as our prescient ability to use this 4-hour chart for a trading chart, it stopped working at the end of this year, just like it did at the end of last year. Once it starts working again, and typically what happens for this to really work is gold needs to make good, bold up and down moves. When it does, this 4-hour chart works well for us. It stopped working when gold started sliding sideways and trying to bottom out. So we don't use it. That is where we are, folks, at the end of the day on Tuesday as we go into Wednesday, the 7th of December. We appreciate you being with us. We love to hear from you. You need help. You got questions, problems, concerns, let us hear from you at chartingwealth.com. You can, of course, email us right there. You can also follow us on Facebook, Twitter, Instagram, YouTube. We're happy to have you. If you appreciate what we do, go to iTunes, subscribe to our channel, give us a 5-star rating, say something nice about us. We really appreciate that as a little reciprocity. Also, go to our YouTube channel and subscribe. First place that we load things up and send them out to is, of course, our email list at chartingwealth.com and then our YouTube channel. Right after that, we have everything loading up to iTunes also. So thank you so much for being with us. God bless. Hope you are practicing every single day. When you sign up for our email, what do you get? 3 big things. You get our How to Read a Stock Chart video, the daily market worksheet, which you need to fill out every day as you listen to the program if you want to supercharge your training, and you get the layout that we use at freestockcharts.com. God bless. Thanks so much. Take care from chartingwealth.com.